Okay, hello, everyone. Welcome to day one of our live. I'm Abby, your relationship accountant, Taxes for Trader 101. Welcome to this room. This room is literally just full of knowledge. This room is for you. I know a lot of you guys are missing me from IG, but I wanted to actually pivot and come to YouTube so I can actually answer the majority of all your questions when it comes to taxes for traders. All right. So tonight I do have a great show for you guys. Tonight we're actually going to discuss the different entities that you can trade under. We're also going to discuss what are the difference between those entities and trading under TTS. Another biggest thing is under my Forex community, they've been going at it on me that Abby, you talk about options, you talk about tax, you talk about options, you talk about stocks, but you hardly talk about Forex. So tonight, we're going to talk about Forex. We're going to discuss 1256. Hi, Emily. We're going to discuss 1256 and we're going to talk about a huge benefit that you can take advantage of when it comes to 1256. So let's actually pull out these questions and let's get them answers for you. All right. So, question number one is what is the difference between trading under those entities versus trading under TTS? Okay. We said it a lot. TTS is not a law. TTS is not a it's something that you don't necessarily, there's not an agreement that you sign with IRS when it comes to TTS. So the biggest difference between the individual that is trading under TTS and the individual that is trading under an entity is that the person that is trading under an entity is running a business, whereas TTS is more of a benefit the IRS provides, the government provides. Remember, TTS was pretty much given birth based on back court cases, right? So at any time, TTS can go away. It's not a law. So I always say, does the individual that is trading under an entity have more advantage than the person that have TTS? Somewhat, yes, but it's more of a preference. The individual that is trading under TTS have requirements, and those requirements are consist of you need to trade about 720 trade per year, and that's about 3 to 4 trades a day. Your trades need to be daily, weekly. Your trades need to be under 30 days. And not only that, you need to be in the stock market for 4 hours a day. So it's very important that you do follow those requirements. So let's just say this year you only traded 700 trade. Would you still be eligible for TTS? No, you wouldn't. So it's very important that you stay on top of your requirements when it comes to trading under a TTS. Now, when it comes to trading under an entity, you're running a business. You need to respect that entity, right? The requirements when it comes to running a business, everyone know, is that if it is not a profitable business, is it's a hobby. It's not a business. So you want to make sure that you are a profitable trader. You want to make sure that you are an active day trader. TTS or entity is not for investors. They are for actually active day traders. So you want to make sure that you are an active day trader, okay? Next question that we had was, all right, what is the difference between trading under an LLC or an S corp? Remember, LLC is just like S corp. It is a pass-through entity. All your realized gains, pass through your personal income tax. When it comes to, remember, the entity itself is not taxed. So it's the realized gains that is passed through the entity, and you're taxed on a personal level. So the S corp, you do have to take payroll, and not just any payroll. It needs to be a reasonable salary. So you want to make sure that if you're making $500,000 in the stock market, your salary is more than $10,000. You're not taking a $10,000 payroll. So it needs to be a reasonable salary. Not just that, the huge benefits when it comes to an S corp is you have pre-tax contribution. I always say to individuals that wants to walk away from their 9 to 5, one of the biggest way you can walk away from your 9 to 5 is to act like a 9 to 5. What does that mean? You want to make sure that you're looking into pre-tax contribution. All the benefits that a 9 to 5 offer, you as a business owner, you as an entrepreneur, you as a trader that is trading under an entity, you can take advantage of them. You can open your own 401k. Yeah, under an LLC, you can open your own solo 401k. You can open your own pre-tax SEP IRA. You can open your own Roth IRA. So you do have amazing benefits, especially under the S corp. You have HSA. your health insurance, all are covered under your S Corp. But tonight, the biggest question that we have that we are covering tonight is the benefits of the 1256. When it comes to the 1256, how the 1256 works, and what are this adventurous split that everybody's talking about. Well, for Forex traders receive a significant tax advantage over security traders under 1256. That advantage that they receive is reporting capital gains on IRS. They're reporting the capital gains on Form 6781. Here's what you want to make sure that you are doing. When you receive your 1099B, you want to make sure on the top right-hand corner under the 1099 miscellaneous, that is where your 1256 is located. And it's very important that you include, if you have any type of gains or loss on your 1256, make sure you're completing Form 6781. What I'm finding is that a lot of Forex traders and future traders are not actually completing Form 6781 because on their 1099, all they see is literally the body. That's all everyone pays attention to, which is the body of their 1099. Whereas in your 1099, it has dividends, it has interest, it has miscellaneous, it has 1256. And you want to make sure that you really pay attention to 1256 because you have to complete Form 6781. So here's the beautiful thing. When you're reporting your capital gains on IRS Form 6781, you want to make sure that you take advantage of the split. So, Abby, what is the split? What you can literally do is split your gains and your losses on your 1256, right? Now your gains and your loss will go on Schedule D as in David. I know there's a lot of DIYs in here, so if you are going to be completing your own tax return, you want to make sure how to actually do this split. And here's how you do it. What the split does, it's called the 1256 contracts and straddles, right? Gains and losses from Section 1256 contract and straddles. It allows you to split your capital gains on your Schedule D with 60% taxed, right, at a lower long-term capital gain rate, which is currently at 15%. Can you imagine, instead of paying 60% tax, you paying 25 or you paying 15%? That is amazing. So, and your 40%, right? So remember, when it comes to Forex and futures, you guys are taxed under the blended tax rate. And the blended tax rate is 60-40. So when you do the split, right? The split for long term, right? For lower long term, you can actually look at 15%. For the 40%, you would be looking at what? 12%. So combined together, the 15 and the 12, that would give you a 23% tax rate instead of 40 or instead of 60%. So it's so important that you discuss the split with your accountant. So when you are completing your tax return, when you are completing Schedule D, when you are completing Form 6781, that you do take advantage of that split. All right. Now, we said the combined rate would be 23% amount to the 12% advantage over the ordinary or short-term rate. If you trade exclusively Forex futures, it's a smooth sailing when it comes to tax time. All right. Your trades fall under the Section 1256 automatically. You receive the 60-40 split. But things get a little bit more complicated tax-wise if you dabble in cash Forex, which is subject to Section 988 treatment. And that is a little bit more difficult. All right. So if you are a Forex trader, tonight was dedicated to you. So do speak with your accountant regarding 1256, regarding Schedule D, regarding Form 6781, regarding Section 988 if you are going to be trading Forex. All right. I hope today was informational for you guys. I know you guys are not used to me being on YouTube. You guys are so used to me being on IG, but my goal is to make sure that I pivot you as well to YouTube so you can take advantage of all of this free knowledge that I'm providing you guys. Okay. So that is all the questions that we are taking for today. Hello, Emily. Hello, Angela. Thank you guys for actually showing up. I will see you guys on Wednesday, 9 p.m. sharp. See you guys soon.